let's imagine this for a second. The United States builds a massive Bitcoin reserve this year, just like it already has with oil in the Strategic Petroleum Reserve. At first sight, it sounds like a bold step into the future of money. But here's the catch. If those reserves were ever sold off in huge amounts, the consequences could ripple across both the crypto world and traditional financial markets in waves we've never seen before. Now, before I move forward, quick reminder. This is not financial advice. I am just sharing my thoughts and research here. And if you enjoy this kind of video, make sure to hit that subscribe button so you don't miss future. So, let's break this down. Supporters of a national Bitcoin reserve believe it could modernize monetary policy and even push Bitcoin closer to being a global reserve currency. It's a compelling vision. But critics see a much darker side. By concentrating Bitcoin in the hands of the governments, the risk of manipulation shoots up. One administration might hold, another might decide to dump. And those sudden moves could flood the market, crash prices, and undermining the very idea of a Bitcoin as a decentralized and neutral asset. Now, we don't even have to imagine. It's already happened. In 2024, Germany sold off 50,000 BTC, and that sale acted like a ceiling on the market, keeping prices suppressed. El Salvador faced its own struggles too, splitting up its reserves across multiple wallets to reduce risks. Even the US has moved huge Bitcoin stashes around. Just the act of transferring those coins, like the $1.9 billion sent to Coinbase in late 2024, can rattle markets and create uncertainty. And I think there's the bigger problem. Haider Rafiq from OKX has warned that a Bitcoin reserve could signal weakness in the US dollar. Think about it. If investors believe America is hedging against its own currency, they might start moving into gold, Swiss francs, or other safe havens. That could trigger sell-offs not just in Bitcoin, but across equities and risk assets too. One domino falls, and suddenly you've got liquidity crunches everywhere. So, where does the Federal Reserve fit into all this? The Fed would likely step in just like it does when oil reserves are tapped. They could use open market operations to absorb shocks, tweak interest rates to manage money supply, and coordinate with the Treasury and regulators to keep sales as orderly as possible. In theory, the Fed becomes the stabilizer. But in practice, Bitcoin's volatility makes that a much harder job than with traditional assets. At the end of the day, creating a strategic Bitcoin reserve is a balancing act between innovation and stability. It could give the United States a new monetary tool, but I believe it could also unleash market chaos if mishandled. So, what do you think? Should governments even hold Bitcoin at this scale, or does it break everything Bitcoin was meant to be? Drop your thoughts in the comments. And don't forget, if you found this useful, like the video, share it with a friend, and subscribe for more insights.